Shalibhadra Shah, the CFO of Motilal Oswal Financial Services. Mr. Shah, great to speak with you here on NDTV Profit. Let's begin with the quarter gone by. This is the highest ever revenue you've clocked in first half, I believe.
Yeah, good afternoon. Hi, that's right. So while this is one of the highest ever quarterly profit and even the half yearly profit the group has achieved in the first half of this financial year, where our profit is actually 1,242 crores, which is actually up about 123% on a year-on-year basis. In fact, last quarter while was also the one of the highest ever quarter in Q1, but this is another high where even quarter-on-quarter basis, sequentially our profit growth is 22%. So it's sparkling Diwali for the numbers and the highest ever profit that we have achieved.
Wait, when people are having a very rough Q2. But for this, I think this segment, and of course for Motilal Oswal, it's a different story altogether. But for the capital market segment, it's a different story. I'm just trying to understand, Mr. Shah, that when your weekly expiries reduce, Bank Nifty and the Bank X goes out of play, and with the kind of squeeze which is coming in on the futures and option side, are you seeing any possible hit in volumes, etc.?
Yeah, so those regulatory changes have been announced and they are being implemented in phase-wise fashion. So market was expecting they may get implemented in one shot, but I think the regulator has taken a calibrated call and has actually implemented these changes over next few months. So certainly there would be a bit of change in the overall options volume, because if one of the major expiries goes off, industry is estimating there could be a bit of impact on that option volumes as far as the retail play in options is concerned. However, we can't predict the retail behavior given the very strong tailwinds of retailization in the equity markets and the digital play which has happened over last many years. So we've seen a lot of regulatory changes have come, and they have been overall a positive impact for medium to longer term for the industry per se, where serious customers would come in the market, and overall we would see more healthy customers coming in. So there could be immediate jittery impacts of that, but we believe it would settle in due course. And again, you can't predict a retail behavior, so that would get adjusted as this keeps on coming in.
Right. Shalibhadra, good afternoon. Neeraj here. Your margins have come high despite the fact that employee expense has shown a very sharp uptick, right? 45% uptick in employee expense. So what's happened here for the employee expense to go up the way it has? And despite that, I know financial company, you don't look at operating margins, but humor me, despite that, if you've clocked in such high operational metrics, can these improve further?
Yeah, so as far as the talent investment is there, the company has been continuously investing in a lot of talent, and I would say in last 12 months actually more than 350 senior employees have joined the company. So it's a function of investing in senior talent which the company is undergoing, whether it is in terms of our private wealth management business, where we continue to invest in our relationship managers. The RM count is now touched 585 RMs and is up almost 28% on a year-on-year basis in terms of the RM count. Further, we have been investing in our asset management business as well as the housing finance business, where people investment continue to grow. Even on our investment banking side, we have been expanding the team, given that we are getting a lot of mandates. The order book is growing. We are again coming back in that space with very sharp growth in the revenues. And also it is a function of growth in the ESOP expenses, which is there because the company has also granted higher employee stock options in last 12 months to a lot of senior employees who have joined. So it's a function of investment in talent, which we continue to do. And at the same time, operating leverage is already started coming in, because if you look at our margins, they have expanded by almost about 300 basis point on a year-on-year basis. So overall operating leverage is very strong. So while absolute growth in the revenue is also very sharp because almost all businesses have grown between 50 to 60% in the revenue growth, and people cost has grown by about 45%. So still it has led to overall operating leverage for the firm even in this quarter.
Now, not too much time with you, Mr. Shah, but let me ask you, everything's doing great except your housing finance segment. Are you hoping for a turnaround there?
So housing finance is also coming back on track. Actually, the disbursement growth is pretty strong there. Our disbursements have grown by almost about 120% on a YOY basis. So we have invested in the talent again on the sales side here, and our sales RM count is actually up by almost 85% on a YOY basis. So the investment in sales would lead to further improvement in our disbursement curve, which would actually result in the higher revenues and profitability in this segment. Already we are seeing the revenue growth and the AUM growth already happening, and once the investment continues to be more productive in the coming periods, we would see the profitability growth also coming in line with those.
So you have 94 lakh clients now, 13,300 employees. How do you aim to close the financial year on those two metrics?
So I think the investment in talent continues to grow, as I was talking about, because as the group is expanding and each of the businesses are actually, all the cylinders are firing at the same time, and it is a very well diversified play. So we expect this client base to grow, because this client base is also a function of, a lot of folios getting added on our AMC side, because that business is outperforming the entire sphere, and has been biggest beneficiaries given our very, very strong performance on our products. So we are expecting a lot of folios addition to happen there, because we've already added almost 12 lakh folios in a quarter. That's a very sharp rise, and that is leading to the overall client base in upticking to almost 94 lakh. So while we're not guiding on the overall end result of FY25, but we expect very, very strong contours of addition of the customers, both on our retail broking platform and our asset management platform. In terms of the employees, so we have been investing, as I spoke about, and these investments would continue to uptake. So I think the more investments is toward the senior talent, which is coming in our private wealth business and investment banking and so on. So in terms of the count, it will not grow so fast, but I think more from a senior management, we are adding the entire sphere.
One more small question is, what are the formal growth targets that you're laying out, if you have, let's say for FY25 and 26, is there a formal target that you're giving on terms of percentage of growth?
So while we're not putting out those guidances of the growth,
okay, so no formal guidance, but rough estimate, I mean, broadly.
So I think you can see our run rate of growth. Last decade, our total profit has grown by 42% CAGR. Yeah, last 1 year, I would say FY24 was almost about 38% growth. This year, we are already at about overall 53% growth in our operating profit. So I think it's very, very sharp run rates of growth that we are seeing, and even sequentially, the growth rates are rising, because as I spoke about, sequential growth is also 22% in our total profit. So I think the base is getting expanded. So I think that's what we stand for at this juncture.
Okay, thank you so much, Shalibhadra Shah, CFO, Motilal Oswal Financial Services. They're speaking about a stellar quarter. Like he says, Diwali's arrived early in the dealing rooms. And as long as the retail investor participation continues, definitely it will. But the larger Q2 factor then continues to be concerned. Thank you so much, Mr. Shah, for joining us today. A pleasure, as always, to speak with you.